Regional banks surging almost 13% following President-elect Donald Trump's victory. As Republicans inch closer to a red sweep, investors pricing in expectations for looser bank regulations and more merger approvals under the incoming administration. Herman Chen of Bloomberg Intelligence joins us now for more. Herman, good morning.
Good morning.
Banks have ripped. They're up like 10% in 5 sessions. Regionals up by almost 13. Dangerous question. What are we pricing in?
We're pricing in a better regulatory backdrop. Trump is expected to loosen some of the regulations, including on M&A. M&A has been really tepid over the past few years due to the fact that regulators under the Biden administration hasn't really approved deals, and it's taken longer to approve deals. That's created a lot of uncertainty for the M&A backdrop.
Who does that help more, the big players or the small ones?
It probably helps the small ones most, especially potential sellers, because they can now garner higher valuations. You mentioned the stock prices ripping. That's really helpful for multiples. And in the event of a sale, you could get a better price for a potential seller.
At the same time, though, part of the reason that M&A has been gummed up, along with regulation, has just been high rates. People are too afraid to let go of businesses because they don't think they'll get the price that they want.
Right.
How does the macro backdrop with a Trump presidency, potentially inflationary type policies, collide with the regulatory backdrop?
Yeah, that's a good question. For rates, that can really exacerbate some of the unrealized losses on the securities portfolio banks. And if you recall, last year, that was the big question for SVB before it failed. With treasuries higher, the unrealized losses will have to be absorbed by the eventual buyer, so that can create some negotiation issues for the banks.
Do you think there's any fear on Wall Street that the more populist wing of the Republican Party might try to push through legislation like J.D. Vance did when he was in Congress, trying to claw back pay from SVB, trying to prevent the big from getting bigger?
Right. There are still a lot of unknowns with the Trump presidency that's upcoming. So those are questions that the banks will need to wade through. At this point, there's a lot of euphoria about the potential easing of the regulations.
And you think we were a year ago when regional banks, there was all this concern potentially they were going to fail. The IMF, the Fitch, they've all come out and said there is a little bit of concern when it comes to the commercial real estate property that these regional banks have a hold of and those loans. Is that coming up anywhere in these concerns? It doesn't look like in the stock prices.
Yeah, definitely. As you've seen since over the past several quarters, the banks have really stacked really strong credit quality quarter after quarter. And while you're seeing losses in the commercial real estate, particularly office commercial real estate, that is a very small portion of the overall portfolio of the regional banks, at least the larger ones that I cover.
So is it fair to say that that crisis is well past us? I
think there's still more to come, but it will be easily absorbed because the banks have built up the bad debt allowance for potential losses, and lower interest rates with the Fed cuts really helps with the sponsors managing the office portfolio.
And potential deregulation, part of a Trump administration, would mean if one of those banks were to fail, who gobbles them up? Regionals become mixed in with regionals, or is it going to be a big player like a JP Morgan buying out one of those smaller?
Right. Really, the typical stance is that the regionals would buy more, the larger regionals would buy failed regionals. But you've seen with JP Morgan's instance with First Republic, there were some surprises there. But typically, we would expect the regionals to get bigger.
Do those bigger players even want to make those kind of deals?
It really depends on the asset. So First Republic was really attractive because they have a strong wealth management franchise. But a typical smaller regional bank that is really cookie cutter, probably a JP Morgan and B of A wouldn't be interested.
I don't know if you can share some names with us, but have you got any takeout targets in mind, some companies you're focused on?
Yeah, takeout targets. A lot of the regionals love to expand in the Southeast. So banks that are in Texas and larger metros in the Southeast are ones that I think would be most attractive.
What is it about the Southeast? What's that about?
It's just demographics. Folks moving from the Northeast to the South. You've seen companies move to the Southeast. And so there's a lot of economic activity, and that's really attractive for the regionals that are in maybe slower growth Midwest areas.
It's a huge demographic story we discussed ahead of the election as well.
massive when it comes to the individuals that are moving to Texas, the individuals that are moving to Florida. When it comes to Texas especially, it's why people actually thought maybe Senator Ted Cruz's seat was up for grabs, because over the last 4 years, there's been a massive inflow of people, especially from places like California.
Herman, it's good to see you.
Thank
Herman
you.
Chan of Bloomberg Intelligence on the financials. The moves, again, that we've seen have been phenomenal. For the banks, up by something like 10%. The regionals up by close to 13%. You spoke to Apollo in the last 24 hours. That stock's up something like 17% in 6 sessions.
They are doing so well, and it's interesting because Scott Kleinman of Apollo said M&A, sure, that's going to do well regardless. He's really excited about wealth prospects, that you're going to have Donald Trump come in and make a great time for wealthy individuals and wealthy investors, cut taxes, they'll have more money to spend, and maybe you'll have regulation around 401ks allowing them to invest in private assets. So he's kind of looking at the whole picture and saying, hey, any angle of this looks good for us.
Is this wish casting, though? Again, we don't know how slim that majority in the House is going to be. Can they get through serious tax cuts? I'm talking about 15% of the corporate tax rate with conditions. Is that really going to be feasible when you might just have a 1-2 seat majority?
We started the conversation this morning with that story. I don't know what the sequencing looks like. Is it tariffs before taxes, taxes before tariffs? Is it a mix of both? I don't know where the emphasis will be for the president. What's he going to shout about every single morning on his X account? And I still don't really know what on the campaign trail gets translated into legislative reality. And we've all got to deal with that right now.
And he's got 2 years because it's a midterm election in 2026. And what happens to the Senate? Does it flip back to Democrats?
They're going to be in a rush, which is why you should expect another flurry of appointments pretty soon.